Hey, good morning. Let's go over today's trade plan. So in Friday's recap, I mentioned that given the strong reversal that we saw off of 37.5, the buy side could still maintain control here. And above 1953, the target was 1965 gap and naked VPOC. We saw in the Sunday night Globex session that ES opened above 1953 on strength and then continued to slowly head higher into that 63 to 65 zone. And at this point, ES is very close to that 1965 gap, and it looks like that gap will almost certainly get tagged off the open here this morning. So at this point, on Friday we saw sellers had a chance. They pressed, but buyers stepped right back in and holding above 1953 now, heading into Globex. The sharp rise that we've seen in the Globex session just confirms that the buy side is very much intact. And at this point on the day time frame, we could be heading up to the 67.5 high volume node, and then 69 quarters, 71.75 initial resistance would be the high odds upside objective. We can still get some responsive selling as we head higher, but at this point, from all the signs that are available in the market, it looks like there is some directional conviction behind this move, and right now the focus is going to be more on the long side rather than the short side, because as the market heads higher, even though we can get some rotations at 67.5 or 69 quarters, 71.75, at this point the probability of an all-out failure and a strong move lower is quite low. So we definitely want to be careful on any short setups, and we want to focus more on the long side and buying pullbacks. So the main idea this morning is that, if this market is truly strong, then we should not really get any significant pullback, and we should hold above the 56.5 to 58.5 pre-market support. And if the market is really strong, then we shouldn't really even come back down and test that area. We should kind of just balance here near the highs and then break up to the upside and test some of those higher prices. So that's the main scenario that's in play at the moment. If we see some really strong rejection or failure at 63 to 65, then of course, we'll have to just scale back a little bit on how aggressive we can be on the long side. But overall, the long side bias is still going to be intact, even if we got to pull back to pre-market support, or even if, in the event of an extended pullback, if we got all the way down to 51 to 53, the long side bias would not change unless we saw a big drop below the initial support zone, below 51 to 53. But if we saw a failure at pre-market resistance and a pullback to initial support, in real time, that may present a short setup. But going into the open, and given the overall context right now, the long side makes more sense. And bigger picture, it seems like ES is actually headed back up towards, the 77.5 to 79.5 zone. Now that doesn't all have to happen in a single day, even though we've seen that it can, but it doesn't have to happen in a single day. It could take, 2 or 3 days for the market to really head all the way back up. But right now, given the bigger picture and given the just the strength of the short-term move back up here towards 63, 65, it just seems like the market is gearing up for a move back up towards the recent highs. And the bigger picture upside objective is 77.5 to 79.5. So even as we push higher here and go up to initial resistance, those areas are still, I think, better served as targets on longs. And they can provide rotation. I mean, there's no doubt that we can get some selling here at initial resistance or even 67.5, the high volume node, and kind of chop around there, because we've already made a decent move in the overnight session, and we have that gap at 52.5, so we're moving away from it. So if we head up to 72 or something, that'd be about 20 points above that previous close, and at that point you may just be exhausting the range on the day time frame, or just how high the market can go on a session where there aren't really any major economic catalysts to drive the market and put in a really wide range, right? So at that point you might just be hitting some range extension targets and just exhausting the range on the day time frame. Doesn't mean that the market is bearish at initial resistance. It can rotate, and we can certainly get some balancing up at those zones. And that's why it makes sense to take profit as the market hits those areas, right? If you're able to get long the market early in the session at a good price, then as we push up to 67.5, 69 quarters, 71.75, it certainly makes sense to take profit because you could get rotation there and you could just start balancing and the market kind of just stops at one of those zones and just pauses, right, and bounces in a range, and then we pick it up again tomorrow and perhaps head higher. So right now, given the context, everything is pointing to a continuation to the upside. 63, 65 is pre-market resistance. So, as we open here, we could get a little bit of selling, some balancing off the open, and then the market starts kind of, stabilizing and heading even higher. But so far, the buyers are in control, so the focus is going to be more on the long side. We're going to be cautious on short setups today, unless there's something in real time that just clearly shows us that, this is a market that is yet again failing at resistance, right? That's not the expectation, but it doesn't mean it can't happen, right? So you have to be just prepared and you have to trade, what the market is showing you in real time. This prep work and the zones are obviously very good and they're providing, the contextual ideas and they definitely prepare us to take advantage of the high probability price move. But in the event that there is some bigger failure that happens, you just have to adjust and adapt to it, even though that is a low probability event right now. So right now the higher odds scenario is for the market to stabilize here at these higher prices and then head higher and tag that 67.5 high volume node, 69 quarters, 71.75 initial resistance, perhaps start balancing at that point. But bigger picture, I think this market is heading higher to 77.5 to 79.5 and probably even the recent highs. So that's how the market is shaping up right now. Let's see how well the buy side holds up off the open and how aggressive they are off the open, and we'll take it from there.